We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelming on gold's side. That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Chris Taylor. Chris was a structural and economic geologist and mining entrepreneur with over 20 years experience with both producers and exploration companies. He was also the president and director of Great Bear Resources and currently chairman of Kodiak Copper. Chris, thanks for joining me today.
Thanks, Tom. And it's always fun to hear used to be the president and CEO of Great Bear. Still adjusting.
Well, it's quite the story that I'm really looking forward to digging in here with you today. And really this geologist series that we're putting together here, the goal is to try and highlight the importance of geologists in the mining space and try to really help to explain to, let's say, the less experienced investors what some of the drill results mean, what it really takes to put some of these projects together. So why don't we start by kind of getting a little bit about what drew you into geology in the first place?
I'm probably like a lot of other people that have an interest in science, but can't really visualize having a life lived out in a lab or, in an academic type setting. So when you're going through high school, for instance, and you're looking at all the available courses, you do these aptitude test things. And, I could have been apparently a forester or a geologist. And in my case specifically, like my grandfather was also a geological engineer. So I grew up around, descriptions about mining and some of the experiences he'd had. So it was a little bit of a foregone conclusion in my case anyway.
Absolutely. So you had an exposure to it early on then.
Yeah, that's right. I remember as a kid sitting on my grandfather's knee and looking at mineral samples. He also used to be, back in the 1960s, he was a diamond importer into Canada. My great-grandfather was a diamond importer and cutter in Belgium. And my grandfather was taking that business into Canada. So I grew up around all the weighing scales and like the wax sealed envelopes. And I've still got a lot of that equipment around. And just looking at minerals and talking about his experiences in mining, that really sort of cemented that interest on my part.
So it must give you a great bit of perspective to really see how the process has evolved over the years, and does it make you grateful for the efficiencies that have evolved since your grandfather's time?
Yeah, I think some of the work items are more efficient. Certainly, there's a lot more regulation in place, which has a lot of hoops that you have to jump through between making a discovery and making a mine. So those are things he wouldn't have been interacting with. But the technology's come a long way. The understanding of geology's come a long way, and of course, metal prices have evolved substantially, so that now we're effectively mining stuff that would have been considered waste back in the 1930s, right? So yeah, the whole industry has changed a great deal.
So Chris, what is the difference between structural geology and maybe exploration geology? Can you kind of split a couple of those apart for us?
Yeah, it's structural geology. Like in my case, I have a master's degree in structural geology. I studied under Dick Brown. He was a professor at Carleton University in Ottawa. And I did a master's thesis on geological structure in the Himalayan mountains, like trying to understand how the Himalayas formed. So I had a month of field work in the Bhutan Himalaya, which was, very influential on me. But structural geology is basically the physical properties of rocks, how they break, how they deform, and it's useful across really all elements of the mineral exploration, even the oil and gas industry. You're looking for traps in sort of oil deposits. So it's just basically the deformation of the rocks, their physical arrangements, and that can be predictive of where you get mineralization in many deposits. If we're talking about gold now, for instance, and that's been something that's useful to me throughout my career.
So what is the main difference, let's say, between structural and exploration geology? Is there a real difference there?
Yeah, structural geology, it's rock properties. It could be used in any context, even construction, engineering context, what have you. Exploration geology is really the search for new deposits, new minerals, right? So marrying the two together, it is a sort of a natural marriage in many properties in many instances, but they're not necessarily related in that sense.
Perfect. So were there any mentors in the space that you looked up to, maybe other than your grandfather, that taught you some important lessons or that took you under their wing?
Absolutely. Like when it comes to geology, one of my principal mentors was Pat McCandless. He was my boss when I worked at Imperial Metals I think I was there from 2004 to 2009. And, Pat gave me a lot of leeway to test new ideas, did a lot of drill core logging with him. We put a little mine into production in Nevada called Sterling. So I was working there. I worked at Red Chris. And I worked at Mount Poly as well. And Pat always gave me a lot of freedom to sort of explore that curiosity about rocks and explore new ideas on how they would be formed. And, working with Pat, we discovered doing structural geology, some offsets on high-grade copper deposits in Mount Poly and some offset, gold zones at the project in Nevada. So it was, he gave me enough rope to hang myself, as you'd say. But in this case, I didn't hang myself. Actually, found some really nice stuff by having that leeway. So working under Pat, he was really encouraging. He's been a great mentor for a lot of young people in the industry, and he certainly encouraged me to, run quickly in this industry.
So, Chris, if you wouldn't mind, maybe for those listeners that aren't familiar with it, can you give us an overview of how the company started, the value that it was able to create for shareholders, and how it was ultimately acquired by Kinross for $1.4 billion?
Well, Great Bear, I've been with, or I was with Great Bear for a 12-year period, which is pretty incredible. So that was 2010 until 2022. And I used to be the VP Exploration with the company when it was working in the Golden Triangle area of BC. It was quite the experience because effectively I'd moved from Ottawa with my wife to Vancouver, got involved in the junior industry. And then, when 2012 rolled around, we went into a very significant market, collapse, I would call it, in the sector, as we all remember. And effectively I had to learn how to swim very rapidly because I'd been thrown into the deep end. So I was ultimately asked by the board of the company to come on as president and CEO. And I basically redid the board, refocused the company, met Bob Singh. Bob Singh is my partner in Great Bear, absolutely critical in the success of the company. And then working with Bob, we ended up finding the Dixie project because it was something that he was familiar with previously. The rest, as they kind of say, is history. We managed to get the project from, if you think about it, it was owned by Perry English. He's a famous prospector in Ontario and Manitoba. And it was owned 67% by Perry, and it was owned 33% by Newmont. And we picked up the project in 2015, bottom of the market. We had no money, had to borrow money off our home equity lines of credit just to get the deal done. And, ultimately it was a $200,000 purchase for the property, which included the royalties on it. And, long story short, we sold it at the end of last year for, in Canadian dollar terms, $1.8 billion, 1.4 billion US.
Yeah, that's an absolutely astounding number when you think about let's say the number that you started with, acquiring the project for 200,000 to the ultimate acquisition. And of course, I think that's the dream for many of the CEOs in this space and obviously the investors as well. But what about your background at Imperial Metals kind of gave you the right skills to be able to succeed in Great Bear, do you think?
That's a great question, actually. One of the things that I was able to do was learn three-dimensional software programs when I was with Imperial. So, for instance, when we were working at the Sterling mine in Nevada, there was a very small crew there. So I was doing all these different tasks, like it was drill core logging, it was planning drill holes, running underground all the time to check on progress, sort of learned how to do a lot of different things. But one of those was 3D modeling of data. And Bob Singh is phenomenal with 3D modeling of data. So when we initially had the data from the Dixie project, there was a few things that stood out. Number one was Bob built a 3D model of the project at that time. And, I'd had enough background to be able to understand these things and, what is reasonable, what problems could be in those data sets. And when we were looking at the data, it was obvious to us that there was a really good predictable gold system on the project, but it had been effectively mismapped and mislogged by previous operators. So because of those 3D modeling skills on Bob's part and that exposure on my part through Imperial, we were able to make a decision. And Bob, he'll laugh at this as I say it, but more of an ultimatum. He's like, Chris, I love this project. If you don't do the deal with Great Bear, I'll try to do the deal myself. So we always laughed about that, and it was pretty obvious we were looking at something special that had a lot of upside potential, and that was really because of that basis in good field geology, core logging, but also 3D modeling.
Mm-hmm. And of course, you mentioned about the timing that you picked up the project in. And I heard you speak about, picking up the project, as you called it, in the investment abyss for the resource industry when I was doing the research for today. So what was the actual timing of the acquisition of the project? And was it important to you to be picking up projects in that part of the cycle?
No, absolutely. There was a lot of pain personally, Tom. At that point, myself, I'd racked up a few $100,000 on my home line of credit, just trying to keep Great Bear alive on a month-to-month basis, paying into the company instead of taking out from it. So it was pretty bad. But it's at those times when good projects become available at decent prices. If you're only buying when everybody else is, you'll never really generate a solid opportunity. And you got to think returns for our shareholders were approximately 30,000%, right? So over the course of the deal, and that's really because we were in there getting a good project at the bottom of the market, and we made literally hundreds and hundreds of people into millionaires off their Great Bear investment. People that followed the story, took the time to listen to my interviews, read the news releases, try to understand what was going on. So some very, very successful investors based on that diligent, a good due diligence process over the course of many years. And it's really, it's the pain of living through the bottom of the cycle. If you can get through them and hang in there where things are the worst, that's where you can set up the best opportunities for, your management teams, your geologists, and the shareholders in the company as well.
Mm-hmm. So what were some of the pieces of data that really interested you guys in picking up the Dixie Lake project? Is it simply the historical drilling that was on the property that you guys identified as being misinterpreted?
Yeah, that's very helpful. And it was one of the main criteria. We wanted a project that was, there's a few things, and I don't know if I'll remember all these immediately, but number one, it had to be in a location where if you found something significant, you could make a mine, right? So there's a lot of properties that are up on the top of mountains or in really remote areas or really sketchy geopolitical jurisdictions. You can almost find whatever you want there, and almost inevitably, you're not going to be able to build a project. So we knew Red Lake was a great place to go because it's got a strong mining history, a supportive mining population, and the right rocks, the right geology, the right potential. But yeah, ultimately, it comes down to we wanted something that could be near-term resource ready. So we wanted a project that had a substantial amount of drilling. And this project, it had over 100 drill holes on it when we took it on, because there was a discovery initially made in the 1980s, and we picked it up in 2015. So with the data that we had, there was enough for us to build the 3D models. And we knew even if we never found another zone, and that was what we now call the Dixie Limb Zone, or historically it was called the 88-4 zone, we had enough data to see that we believed it was badly misinterpreted by past operators, really badly misinterpreted. Even the rock types were recorded incorrectly. There were ultramafic rocks that were logged as, all kinds of other stuff, sediments in some cases. So, as a geologist, it was obvious there was a lot of potential we could unlock, but, it was that combination of having that data-rich environment that we could work with and the location of the project.
Mm-hmm. So was there anything that you and the team did differently when exploring the project that you think led to such a great discovery? Maybe differently than other operators that were looking at projects in the area?
Yeah, there's the most important single element that we did differently was oriented drill core. So when you're working in a system that, in our case, it would be incorrect to call it a vein-dominated system, but there's a lot of sheets of mineralization that have orientations that are important to understand. And companies will often have a false economy of of savings, and they'll choose to not operate with oriented drill core because it is a little bit cheaper. But ultimately, even if you're paying, say, 10% more, 15% more in cases for oriented drill core, you're saving yourselves, a great deal of repetition in the drilling. And what it let us do was figure out the exact orientation of these gold zones, especially in the early zones that we were looking at, the Dixie limb zone, the hinge zone. Well, when we found that, those discoveries really were put together because of oriented drill core.
So as a structural geologist, do you worry about the depths of intersects or logistical considerations of a deposit, or are you more so focused on just identifying the size and grades of the deposit?
I think anybody would be quite concerned with both of those factors. Ultimately, the costs rise substantially as you go to depth. With us, the gold zones went right to surface, so it was never an issue. And then you look at comparable deposits. We always point to Hemlo because it's the most geologically similar, but you can point to the Red Lake mine as well. These things will go down vertically for kilometers once you're into them. The pressure, temperature conditions, the strain conditions on these types of mesothermal deposits, they extend vertically for kilometers and laterally for kilometers. So once you're into one, you don't tend to worry about it as much. You just focus on the delineation.
And it's more so just a consideration to try and identify the deposit at that time rather than worry about the actual logistics of if it's going to become an underground mine or an open pit.
Like ultimately, I'm not sure if your question is our specific case or the general case. And the general case, I think that impacts how companies have to raise money. Mm-hmm. If they have to do really deep drilling, they're going to have to explain that to shareholders and other investors. In our case, because it was a combination, ultimately it will be a combination open pit and underground project. It has availability because of the presence of gold right to surface to develop it in different ways.
Awesome. So when building the geological models, Chris, is it just a matter of getting, lots of drills in the ground and following the mineralization, or do you have to have a more sophisticated way of determining drill targets?
No, one of the absolute stupidest things that companies do in the space is put too many drill rigs on a project, and they get ahead of themselves in generating meters of data before they understand it. It's a common mistake because it's appealing to bankers. When you see a large number of drills from a company, it's usually a sell signal to me as an investor. You don't want to pile in on something where they're overly aggressive on their expenditure of dollars, because it means that they're going to be replacing those dollars with dilution in the relatively near term. So you want to see a good balance of understanding and advancement of the science on the project, which is commensurate with the number of drills. So you really want to make sure you understand what you're doing before you start loading in drills and spending money that you have to raise through your investor pool.
Yeah, that's an interesting point. So how big was the size of the deposit at the point that you, let's say, started getting interest from majors that wanted to take over the project? Or had you even at that point done a PEA or a 43-101?
It's interesting. Like, we took a very different approach. We just published all of our data effectively. Mm-hmm. So it really irritates me when I'm reading drill results from other companies and I don't know what the included intervals are on drill holes. So say they put out 10 meters of 10 grams. Was all the gold from 1 meter, or was the gold actually spread over 10 meters of width? You can't tell when you look at the drill results from some companies. You could with us. We would explain all the various sub intervals for all the holes. What that let everybody do was we had a very significant number of companies doing live updated models the entire time we were working with the Dixie project. They were running their own resources. Like, what the investor doesn't typically understand is the last thing a major mining company cares about is what the junior company puts out for a resource. They do not care, because they have teams that do that work better than anything that you're going to be able to do, right? So what they want to see is your methodology. If you're doing correct sampling, correct reporting, and they believe in the quality of the data and the quality of the work, that's what the company should be focusing on, not rushing through publication of studies, which ultimately are relatively meaningless, because if you're transparent with your data disclosure, everybody in the world is going to be able to build up a model. And, if you have a major discovery like we had with Gray Great Bear. That's one of the best things you can do, is have a high level of transparency. And ultimately, it's not like a closed system. The people that work for different companies, they don't talk directly, but they all kind of know what each other are up to. Mm-hmm. So, you end up with pools of dozens or hundreds of professionals that are talking about your system, talking about your discovery. And if you're transparent and consistent with the information you provide, they're going to have, the ability to build their own models and ultimately get to the value case on their own before you try to spoon feed it to them.
Yeah, that's a great point. And, like you say, being consistent and being, communicating well, I think lets them, as you said, build that resource on their own. So yeah. Is there a relatively easy way for your average resource investor to think about intercept grades and drill results when they come out? Or, are there some rules of thumb to be able to understand drill results?
It depends on the type of deposit that you're looking at. And, we're talking about gold specifically in this case, so in Red Lake, generally mesothermal gold systems mining to depth. If you have a 2 meter interval of about 10 grams, you can mine that down to whatever, to significant depth generally. In the near surface for bulk tonnage type systems, it depends on the type of system. People often get confused with the discussion of basically oxide gold versus, other types of gold. And you can mine, oxide gold deposits at relatively low grades. I don't want to give you a specific number. I hear people bandy about 100 meters of a gram all the time as a significant near surface gold number. That can be true, or it can be untrue, depending on the type of rocks that you're in. Generally, you want to see gold that at least has it begins near surface. And just remember, when you're looking at drill holes, you may be looking at people that are drilling straight down a system, which inflates the width. So the only thing that you really need to see as an investor is make sure that the companies you're looking at have cross sections out. Remember, cross sections are not long sections. So these are two differences, right? So if you slice a deposit along its long axis, this is like having a cucumber in front of you and cutting it along the long part of the cucumber and then compressing all that onto a page. Well, what you'd see if you looked at that was a solid, a bunch of seeds and all this kind of stuff. I'm making up this analogy on the fly, so you just have to bear with me. But if you really want to understand what's located inside the cucumber, you better slice it along its width and not along its length. And if you slice it along the width and you give all that information to people, these are the cross sections. You can see how the zones go section to section to section, whether they're relatively continuous. The problem with long sections, when you show that type of data, is you can compress different parallel features onto one plane, and it gives a false impression of continuity. So that's a lot harder to do on a cross section. So one of the biggest red flags in the industry is to, follow companies that only put out long section work. That is a strong warning sign. So look for companies that produce, rather than looking for specific grade width combinations, look for the cross sections. That's going to have the information that you need as an investor. Ask a geologist friend what they think about it, and you can see if the grades really hang together, over any significant strike length.
Perfect. I think that's a really helpful answer for those, those of us that aren't intimately, knowledgeable with the how to interpret these drill results. So at what point, Chris, did the company start to get interest from majors wanting to come in and take over the company?
Effectively, there was a lot of interest in the project, even from early days, like when we discovered the Hinge Zone, for instance, which was one of these vein type zones, Red Lake style high grade vein type zones that we found in 2018. That began to elicit quite a bit of interest in terms of site visits and other looks through on the data. And then when we found the LP fault, it was such an unusual discovery. We met interest, but a huge amount of skepticism initially, because we were drilling across this thing and hitting the same rocks and the same kind of gold kilometer after kilometer. We did it for 4 kilometers, and then we did another 6 kilometers of stepping along it for about 10 or 11 kilometers. And it was all the same rocks, although it was obvious the gold is best developed in the middle of the property. So that middle sort of 4 to 5 kilometer area is where most of the ounces will ultimately be delineated based on the information we know right now. So there was interest all the way through, but probably by the time we got up to about 100 drill holes into the LP fault. So roughly, about a year after the initial discovery. So we found it in, first news was in, I think it was May of 2019. So by the time we got into the summer of 2020, the interest level was very high.
So how did you evaluate, let's say, the different offers from interested parties that wanted the project?
Well, ultimately, you've just got to think about, what the structure of an offer is, whether it's cash-based, share-based, and the types of premiums that are involved. Those are your basic decision-making criteria. And obviously, we've had offers on the project which included joint ventures and other sort of, use the euphemism, carving it up like a roast. I could say that as well. So we weren't interested in any of those either. So, ultimately it's deal structure and, any significant offer on a sort of, $1 billion plus asset that's likely to come from a senior gold producer. So we had a high quality group of companies that were looking at Great Bear.
So Great Bear Royalties ended up being a spin out of Great Bear Resources as well. So can you explain the idea behind creating that royalty vehicle?
Yeah, it is quite interesting, and I would warn people right up front that it's probably not very repeatable either. And I have seen a lot of people want to go through this because it has worked out well for us and our shareholders, but that's only because it's a world-class asset that we were dealing with. So just keep that in mind. So back around like 2018, 2019, we knew that we had significant discoveries on our hands, but after we found the LP fault in 2019. We got to about the middle of 2020 or the end of 2019, let's say, and there was enough holes in that thing already for us to know we were on to a major kind of world-class type discovery. And the market was not appreciating it. So part of the reason to do the royalty spin out was because we had been clever. And we had bought out the royalties that were on the project when we acquired it originally, Bob Singh and myself. And the other board members were highly supportive, but we ended up buying out the royalties just so we could have optionality in the future. So it had zero royalty. And there are almost no major world-class projects out there that have no royalty on them. Usually there's a string attached to these things because there's very few new discoveries of that scale. Most of them are known for decades, at this point. So we had an opportunity, and what I needed to be able to do, I was sitting in all these meetings trying to explain the potential. And I try to, you paint a picture as you're Chris Taylor, you're a geologist, you walk into a room full of bankers, right? Or sit at the table with a bunch of bankers and you just enjoy yourself watching the expressions of skepticism or boredom or disbelief that are fleeting across their fleeting across their faces. So, it was part of the royalty spinout mechanism was making the banking world and the investment world assess Great Bear impartially for the first time, like take a close, hard look at it. And we had enough data, it was like over 100 holes at that point, that when they began to put pen to paper and began modeling the potential deposit, it was like a eureka moment going off in their heads. And they could see that we did have something significant on our hands that could be, like a world-class discovery. So it was a bit of a communication device for us to make that analysis happen seriously. And I was told we were insane. I would walk into these meetings and people would tell me, bankers I know quite well now, you have crippled this project. This is the stupidest thing that we've seen done. This must be some sort of ploy. You don't really want to put the royalty on it, and then about a year later, once it was all done, Chris, that was a genius move. You guys have redefined how royalties should be made in the industry. Anyway, that's also wrong. So, but the bottom line is like it made everybody analyze it. It got us much further ahead in the community, the investment community's understanding, because we did have hundreds of holes by the time that process was done. And it was really a mechanism finally to unlock value for shareholders. If you don't have a royalty on a project and you meet with big mining companies, for instance, instance, you'll see on their line items, they'll give you a spreadsheet, and on the line item, there'll always be a royalty box in there, and they'll always have about 2% ticked off as a default. So they just assume when they're taking up a major project, it's going to have about a 2% NSR or more on it. Mm-hmm. So the 2% NSR, nobody batted an eye at it when we were going through all the review processes. And it was a way to give extra value to our shareholders, especially shareholders that took a lot of risk on early in the deal. So they had extra reward by having stuck with us. And like I said, these are people that made many millions of dollars off of their investment with Great Bear. So we tried to be as rewarding to the shareholder base as possible and shake the market up in a way that would make it, pay attention to us and take us seriously.
Mm-hmm. Yeah, it's interesting how it had that effect. And like you say, before people were forced to really analyze the company, you guys weren't being rewarded for it. So, Chris, you've mentioned several times, the people around you, and I'd like to get your take on the importance of having a great team to really get the project from start to finish.
Well, you can think about it as a CEO in a couple of ways. Like, being the CEO, at sometimes it feels like you're trying to herd a bunch of cats. Actually, it often feels like you're herding cats, but sometimes it's like taking, dogs for a walk. I was just walking my dogs this morning, so this analogy is in my mind. You can give people, operationally a short leash, or you can give them a very long leash or no leash at all. And if you have the right people working with you, they're off leash. Like, they will do the right thing because they have a compatible vision for the project and the company right from the get-go, and they'll work on their own without you having to breathe down their neck. So it's management style in a way, also leads you to the people that you want to work with. And in my case, I want to work with people, and this will extend in the future as well, that are self-motivated, professional, and competent, obviously. So we were really fortunate. We had Geology Exploration, friends of ours friends now, I didn't know them previously, but Ian Russell, Terry Bursey, Crystal McCullough, employees of theirs early on, like Rick Greenwood. So these are guys that basically ran the project for us. They were our, eyes, ears, brains, boots on the ground in Red Lake, and especially the way COVID evolved right in the middle of this. Like, can you imagine trying to run a project like this if we were trying to commute back and forth all the time? It would never have worked. So by having competent, independently minded people on site all the time, it's really the only way to make something like this successful. So you go through that decision-making process early on to find those independently minded professional people. And we're very fortunate with the group that we work with.
So do you think that, part of the group having skin in the game, or all of the group having skin in the game, really helps motivate and, let's say, clarify that vision for what they ultimately want the company to become as well?
Yeah, definitely. I totally agree with that. Like, it's one of the things that drives me a little bit crazy is when you look at, say, boards of companies and they don't own any stock, right? Mm-hmm. So there's a balance. Like, you don't want somebody just thinking on shareholder behalf, but it does need to be part of your consideration, right? It isn't the US where ultimately it's just shareholders you think about. It's a Canadian company and you think about the best interests of the company, but those include shareholder interests, right? Mm-hmm. So, I always tried to make sure that people were incentivized within Great Bear. And, particularly like my partner, Bob, we built it together, brought in the board members, the whole bit. So Bob Singh and myself, we did quite well off the transaction, but so did a lot of other people that stuck with us over the long term. So yeah, you're absolutely right, Tom. Like, the incentives are important for success. Ownership is really critical for success.
So going forward, you're now chairman of Kodiak Copper as well. So what are you looking forward to being a part of that company here in the coming future?
Kodiak was a bit of a sister company to Great Bear. I've been involved with both since around 2010. And Kodiak was originally Dunedin Ventures, and it was looking at diamonds up in Nunavut. So we did find some diamond-bearing dikes up there. I was working with Chuck Fipke of Diamond fame. So we were successful on the exploration side, but just the diamond market was getting pretty negative, and I was really, with the EV revolution revolution going on and just general growth around the world, I felt like copper, and the board members ultimately felt like copper was a better direction for the company. So a very similar story to Great Bear. Picked up a project in the middle of BC, which is it's about a 3-hour drive from Vancouver, and it had over 100 drill holes on the project. It was not never coherently put together, and same sort of philosophy. So we actually did make a significant copper discovery 2 years ago now, the Gate Zone, and that's something that the company's been working on, and it's got a whole slew of porphyry targets across about a 20-kilometer land package. So I like the exploration process. I like it's one of the industries where you can actually pretty much make value out of nothing, right? One of the best legal ways to make value out of nothing. And another project like this that you bought for $200,000, and now you found Teck Resources as a significant investor based on the strength of drill results so far. So I look forward to watching that company do its thing, test all these targets, and see what comes.
Mm-hmm. So, Chris, instead of maybe some advice for investors, what about some advice for young geos that are looking to get into the industry? What advice would you give them?
That's an interesting question. I'd say one of the most important things you can do is stick with the process. It's very tempting, and I was tempted many times, especially when you're in the situation where you're, paying out instead of getting paid on a monthly basis. That's where you got to get your entrepreneurial boots on and really be willing to walk the walk if you're talking the talk. So have persistence through the down cycles. They're going to be there. Save. When times are good, save so that you can get through the bad cycles. Don't carry a lot of debt as an exploration geologist. These are, words of wisdom. It can be one of the most rewarding careers out there and one of the most punishing careers out there at the same time, depending on your mindset and how you treat the cyclicality of the industry. So I would say, get ready for a major adventure if that's the path that you're ready to go on, and stick with it through the bad times.
Excellent, Chris. Well, I appreciate you sharing your perspective and all the things that you've learned with us today. Is there anything else you'd like to touch on before we wrap up here?
No, thanks, Tom. I'm happy people are interested in the Great Bear story. I'm happy a lot of people benefit from it. I know the communities in Red Lake are going to benefit from it for years to come. Kinross was a great company to partner up with. They're very motivated to get that project into development and operations ASAP. So, I would just thanks for the interest, and keep you posted as we embark on new geological journeys.
Absolutely. Thanks so much for your time today, Chris.
Okay, thanks, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.